with the kind of rally that we've seen in gold, silver, etc., what should be the right investment mode, whether it should be digital gold, whether it should be physical gold, or whether it should be mutual funds or ETF? Nilesh bhai, thank you so much for taking out the time and speaking with us at NDTV Profit. And my first question to you is the same, right? We've seen the rally already in these counters, and there are analysts that expect that this rally might continue. What would you recommend? You know, the digital gold update that has come in, SEBI warning investors about it. How should one go about it while investing in gold as well as silver?
So one, when regulator says something, it makes sense to listen.
Absolutely.
They have much better view than what an individual or an institution can have. And I have always benefited listening to the regulator. Second, when you are investing in gold, please remember the main reason why gold prices are on up move. The eastern part of the world, like Russia, China, India, these are the central banks which have been buying gold. The western part of the world, like Switzerland, have sold gold. We believe this trend is likely to continue as US dollar weakens, as uncertainty around US policy increases, and most importantly, people have learned that your overseas securities can be frozen, whereas gold, which is lying with you, will remain with you. The bull run of gold is driven by central bank buying, and as long as they continue to buy, we believe gold prices will remain supportive. But please remember, gold does not have intrinsic value. There is no cash flow, there's no rights, there's no bonus, there's no dividend. This is perception of value. It has tasted generations, it has lasted generations, but it is still a perception of value. Our request to investor is to invest in gold, but with limited quantity, a small percentage of your portfolio because of this particular nature.
Good afternoon, Nilesh bhai. Sharad here. Now, suppose if a newbie comes into the market and he has 100 rupees with him, what kind of gold allocation should he do now? Current situation, gold prices have gone up. And also, if you could just give us, the equity allocation, gold acquisition. If somebody has 100 rupees, how will you break that?
So, Sharad bhai, obviously everything depends upon risk profile and investment objective. So we are talking about an average guy who has longer term time horizon. In that kind of scenario, my recommendation will be maybe about 50-55% in equity, about 10 odd percent in precious metal like gold and silver, and balance amount in fixed income or REIT InvIT kind of instruments. The best way to figure out what a fund manager is having a view in terms of asset class is to look at asset allocation of their multi-asset allocation fund. Sharad bhai, if you are rich, there are many private bankers, wealth managers happy to serve you. But we at Mutual Fund have created a product to provide similar service to an average investor for as little as 100 rupee. The professional fund manager decides how much to invest in debt, equity, and precious metal. And that allocation is a clear indication of our views on the market. What I have indicated to investors is exactly what Kotak Multi-Asset Allocation Fund allocation is between debt, equity, and gold, silver. A minor adjustment has been made for an average investor risk profile.
By considering, the kind of gold rally that we've seen in 2025, do you think and outperforming equities in a very large way, do you think this trend will continue in 2026 as well? Because a lot of analysts believe that even 2026, we might see markets consolidating only. Like, we cannot expect the kind of runway that we've seen in 2024. Do you also agree with that argument?
To answer that, I'll have to be friend to Chinese central bank governor. Whatever price he decides will be the price of gold. Please remember that this bull run of gold is driven by global central banks becoming like Indian housewife, buying gold and not selling it. The mining of gold is very, very small, and hence there is not enough supply to meet demand of Indian housewives as well as central bankers. Every investor in gold must be watching on a monthly basis what is central bank activity. If they are buying, most likely prices will go up. If they are selling, in all likelihood prices will fall. If they are not doing much, then prices will consolidate. This is a call on central bank behavior. Prices will move as per their purchases.
Pretty interesting. Nilesh bhai, we'll speak on equities also. एक सवाल तो बनता है equities में भी. The entire thing is markets are doing well now. They're factoring in some Bihar election results. Global cues are also improving. अब आगे जाते हुए क्या होगा? What will be next forward leg for the markets now?
So there will be many short-term factors which could influence prices. For example, tariff deal. Whether tariff deal happens, there could be a relief rally. For example, geopolitical uncertainty. We did witness very unfortunate event in Delhi, and there will be repercussions of the same. But over longer term, stocks are slave of earning power. Our market valuations are at premium to global emerging market peers. Hence, investors' return over longer period of time will be linked to earnings growth. We believe after 6 quarters of earnings growth remaining in single digit, there is a good chances that earnings growth for December quarter could move into double digit trajectory. Of course, it will be low double digit trajectory, and that should be an indicator of long-term return potential.
Fair enough, Nilesh bhai. Thank you so much for giving us those insights, and I'm sure our viewers will take away a lot of learnings from that conversation. Thank you so much for taking out the time and speaking with us at NDTV Profit.